In this module, we would be practicing some complex transactions. And this will make you more perfect now. Look, what are the complex transactions in which we see we have to combine two entries, or there is a discount allowed or discount received issue in that transaction, or loss of stock, something like this. These are few complex transactions that we encounter while doing bookkeeping. So let's solve a practical question in which we'll see that how these complex transactions are dealt with by the bookkeeper. The transaction is on December 1, business started with 100,000 cash and furniture 35,000. Okay, we are having capital. Well, let me tell you one little thing because of the space management. What we are doing in the column for rupees, we are putting this rupees in 1,000, rupees in 1,000 for debit and rupees in 1,000 for credit. It will remain 100,000, but like the style is, when I will write here 100, it would be read as 100,000. It would be read as 35,000. It would be read as 135,000. Okay? So it is like you should be comfortable now on it. Well, so business started with 100,000 cash and furniture 35,000 as capital. So total capital would be 135,000, against which we received cash 100 and furniture as a resource in the business 35,000. So 100,000 and 35,000 is our debit, and 135 is in our credit. So sum of debit is equal to sum of credit, and cash and furniture introduced as capital. The next transaction is machinery purchased from Jordan on credit 20,000. Machinery we have purchased is an asset, debit, and since it is purchased on credit, it is creating a creditor as a liability in our books. So 20,000 in the credit as a liability and 20,000 in the debit as an asset. Machinery account debit and creditor Jordan account is credit with 20,000. Then comes loan taken from bank, 200,000. So when we are taking loan from bank, our bank balance will increase with 200,000, and at the same time bank loan, which is our liability, will also be increased. This bank loan is becoming our liability. Okay, so this liability is increasing, therefore to be credited. Machinery returned to Jordan 20,000. Look, the machinery that we purchased here, which was our debit, now that machine has been returned. So this machine has been returned. When we are returning the machine, now there is no more liability on us. So the liability would be debited. And the machine account will also no more be with us. So machine account is credited, being asset reduced machine credit. Then bought goods on credit from Pearl Traders 60,000. When we have this information, bought goods, simply we have this accounting head with us, purchases. So purchases is an expense. Expense is increasing with 60,000 debit, and creditor liability, Pearl Traders account, would be credited with 60,000. Bought goods on credit from Jan store. Again, the transaction would remain for purchases. Therefore, purchase account debit and creditor credit, but here Jan store would be credited. Accounting entry is same, but the amount would be worked out with this trade discount effect. So 100,000 times 5% is giving us 5,000. So subtract this 5,000 from 100,000, you will get 95,000. So this is the discounted price 95,000, which would be taken in this accounting entry. Remember that trade discount is not accounted for in the books. Okay. Goods sold for 20,000 to Falcon on settlement terms 5, 10, net 30. So it is on settlement terms on 11th December that if it is paid within 10 days, then 5% discount would be allowed. But as of now, the accounting entry for this sales would be made with total amount of 20,000. So sales income is credit with 20,000 and debtors Falcon account is debit with 20,000. Okay. The next is on 12th December, sold goods on credit to John Smith for 80,000. Again, the accounting entry remains same because it is also for sale on credit, it is also for sale on credit. So debtors John Smith, we will use the name of debtor here, and sales income account would be credited with 80,000 and 80,000. It is sales on credit. Goods returned to pearl traders. Yes, here there is a purchases return. We are returning goods. When we are returning goods, it is returns outward and it is a purchase return. So purchase return behaves opposite to the purchases account. Always remember, purchase account causes a decrease in purchases. So when we say purchases are expense, purchases to be debited. At the same time, since purchase return is reducing purchases, therefore purchase return should be credited with 10,000 and creditor is reducing because of this purchase return. The liability is reducing, therefore it should be debited. Falcon settled his account in full. So settlement of Falcon in full on 17th December. Remember, when we sold goods to Falcon, that was 11th December. And that was based on a settlement discount of 5%. So now, if it is being settled within 10 days, discount should be there. So it is within 10 days, okay. It was originally sold on 11th and being settled on 17th of the same month. So the discount is 5% of 20,000. 20,000 times 5% is 1,000. It is our loss. It is our loss. And 19,000 we have received. It is increase in cash asset. So debit. And our receivables are reducing. Asset is reducing. Therefore should be credited. Now cash paid to pearl trader rupees 48,000 in full settlement of his account. Let's go back. Pearl trader. Where is pearl trader? Yes, we in fact purchased goods from pearl trader for 60,000. 60,000 was our liability. This is the creditor. Then what happened? That we returned to pearl trader for 10,000. This is 10,000. So 60 minus 10 is equal to 50,000. So 50,000 was the amount that we were supposed to pay to pearl traders. So what happens? That we are paying 48,000 in full. So 50,000 minus 48,000 gives a discount of 2,000. This is settlement discount or cash discount. So we are enjoying this discount as discount received. So this is our saving. We are settling our account in full by paying 48,000. So cash reduce, credit 48,000 and full amount of liability is no more on us. Therefore, creditor would be debited with 50,000 and cash account would be credited with 48,000 and discount received is 2. And then comes goods returned by John Smith. Now, John Smith, who was our debtor, our customer, is returning goods to us. So when we are receiving goods from John Smith, it is sales return. So sales return would be debited just it is a reduction in sales. So sales being credit, when we are using sales return, it will behave opposite to sales. Therefore, sales return would always be debited, remember. And it is reducing receivable. So receivable reducing means there is decrease in asset, and decrease in asset is always credited. So sales return debit and debtors John Smith credit. Well, next comes charity paid in cash. Charity is our expense, should be debited, and we have paid cash, and cash is credited 2,000 and 2,000. It's easy. Now there is drawing worth 5,000 in cash and 10,000 in goods. So cash is reducing with 10,000 and goods are reducing, which would be subtracting from purchases. So purchases are reducing and cash is reducing. Both will be credited because the nature of both accounts is debit. And drawing being contra to capital or to be reduced from owner's equity would always be debited. Okay. Well, goods distributed as free sample and given away as charity. Remember one thing, whenever there is a reduction in purchased goods other than because of sales and purchases return, we will credit purchases account. So here there is a reduction in purchased goods because of free sample and charity. So free sample and charity would be debited, being expense. This is expense, and we know expense is debit and it is increasing in expense, should be debited. And purchases is expense and there is reduction in purchases, therefore it should be credited. So the important tips that we have to remember are: discount to debtor is always expense. It does not mean cash payment. Remember, discount allowed does not mean cash payment. Rather, we are receiving less as cash from our receivables. And discount from creditor is always an income. It's a saving. It does not mean that we have received cash. Rather, it is our saving by paying less to our creditors. Then practice this exercise at least 3 times, because this is something, if you will practice more, it will give you a perfect knowledge of bookkeeping. Thank you.